Good morning and welcome to Maryland Today. It is that time again. I'd love to welcome Nina Heck in today, Director of Counseling and Client Services for Guidewell Financial Solutions. Nina, pleasure to have you back in here.
Thank you, Jeff. Thanks for having me.
Well, it is that time of year. Many students recently hit the college campus. They got class underway here. As we enter this new academic year, though, why is it more important than ever for these students to avoid accruing unnecessary debt?
Well, we know for certain, Jeff, that the college tuition just continues to increase with each year. In fact, the total amount owed on student loans is now greater than the amount owed on credit cards.
It's amazing.
I actually just sat in on a webinar yesterday from the University of Wisconsin where they had the statistics of $1.2 trillion is owed in student loan debt. 20% of that is in some form of delinquency at this time, and $7 million of that is in default. So it is tremendous. Our employment prospects have become better than what they were in the past. However, oftentimes when we counsel students or graduates of college, they can find a job, but they can't necessarily find enough income to support the student loans that they're trying to repay. So that's become, a real problem with many of them.
Well, when it comes to student loan debt, how can young adults limit how much they take on?
One of the things they want to make sure that they do is they need to assess how much money they have available and how much that they can get into as far as the student loans themselves.
Okay.
So understanding that maybe instead of going off to a four-year college, you consider a community college for the first couple of years, or rather than leaving state, stay in state so that you get a better rate of what the tuition will be for an in-state student. So those are a couple of things. As far as if they go away, living maybe off campus versus being in the dorm might be a help to them. You have to kind of really weigh these expenses out and determine what works best for your child or your student. One of the things I found with my daughters is, that first year I had to have them have full meal plans because, I just knew they were going to go off and starve to death. When we reassessed what was going on, we determined they were using about a third of that meal plan, and the rest was the money that they would call home and say, I ran out of cash, I need some little money, and I'm still trying to get that part-time job. So that's something you want to look at.
See, where your daughters and I differ is that I used every penny of my meal plan my freshman year, and I enjoyed the largest meal plan that I had. But that's a different story for a different day. But at college, how can you keep the amount that you're spending to a minimum?
Well, one of the things you want to make sure that you've done prior to going again is, or actually at this point you're already at college, so I'm hoping that you've already looked at the budget from the parent's perspective as well as from the student's perspective. And if you haven't done that, we have a really great interactive budget on our website at Guidewell Financial Solutions, or certainly you can give us a call and we can help a person with that. Our phone number is 1-800-642-2227. So avoid spending money on things that you don't need. We spoke earlier about possibly living off campus. We also talked about meal plans. So these are some of the things that you can look at as far as keeping your expenses down. Certainly having a budget that works, really looking at the income. If it's a new income that you've just started with on campus, then you want to have that as your income that you're starting with and any additional help parents are doing. And then set up a budget with the expenses that you're currently incurring. And again, note that you need to revisit these. Things that can crop up will be, needing new clothes or trips or different things that pop up on campus that you need additional funding for. So if you have a new job and you can set a little bit aside in savings, it certainly will help.
Well, here's a question for you, Nina, that 18-year-old me probably should have asked you a few years ago. But what advice do you have for students who want to pursue a field of study that may not pay well or may not have a job available once they graduate?
This can be very difficult because oftentimes we see this where a person goes off and, to a college and a private school and they might be paying $40,000 a year for a bachelor's degree that they know when they come back, they're looking at a job that's going to start in the mid-30s. So you can accrue a lot of debt and at the same token realize that you're not going to be able to afford to pay this. So one of the things we suggest is do your homework, look at the state you live in, look at the job, look at the potential income that job can provide for you before setting out to take on all these student loans. You really need to know that there's a good balance there. Taking on a paid internship certainly helps. Any type of internship may lead to a position in a company after you graduate, so that helps a lot instead of being on that search. And, of course, think about limiting your parents' liability because if you know that you're going to get into something that's not going to pay well and your parents have co-signed and you're not able to pay, they just became the provider of that student loan payment. So, again, I think consider community college maybe for the first couple of years, and then consider finishing out your bachelor's degree with a college that you can maybe even avoid living on campus and you can commute back and forth.
And that's not a bad idea either because, a lot of those basic classes you'll take in your freshman, sophomore year, it doesn't really matter where you take them. I always tell people 2 + 2 = 4, no matter what math class you're taking. So if that's going to save you some money going to a community college, knocking out some of those basic requirements, hey, it's not a bad idea at all.
No, I agree with you, Jeff.
Well, Nina, given the cost of tuition, many students, they can't attend college without taking out some sort of student loan. I might even say most students can't attend college without taking out a student loan. So what advice do you have for these students?
So, of course, completing your FAFSA and then, presenting that to the colleges that you're looking for and looking at what the financial packets are coming back because you're looking for as much free money as you can get from these packages.
Sure.
So you want to really understand the whole concept behind taking on student loans. There's terms such as deferment and forbearance. You need to understand when they come into place and what they mean. Also understand that how much you borrow, there's an interest attached to that, so all of that's going to be repaid at the time the loans come due. What your options are as far as making your payments when that comes due once you finish school. So and the difference, I guess, between federal loans and private lending, that there's a tremendous difference there, especially with interest rate and options that are available for those types of loans.
So how important is it to involve parents in the whole student loan process?
Jeff, I don't know too many parents that are not involved with the student loan process.
True.
So it's very important that they are involved and that you work together in this process.
If my parents let me do everything when I was a senior in high school, there's no way I would have gotten into college.
Right. and many parents will say that today, believe me. So parents provide a valuable amount of input into this whole process. So before the student leaves for college, or if your student's already in college, reassess what they're spending. You don't want surprises. You don't want to find out that cell phone bill is $1,000. Mm-hmm. You don't need to find out that they just ran up a credit card that you graciously allowed them to use, and it's now over the limit and has late and over the limit fees. So it's very important that you set up times, you meet with your student, your child, and understand what's going on while they're away at school.
Do you have any further advice for parents when it comes to college finances?
Parents really contribute a lot more. The tuition itself is going up, but also what the parent is contributing to the student's education is also increasing. So again, regular monitoring of what the child's spending is something I would always encourage, sticking to their budget, asking questions. You have to have that open door concept where you both feel comfortable discussing these things and not pointing fingers and ending up in, just setting up a bad situation. Obviously, from the student's perspective, trying to get ideas for a part-time job, buying used books versus buying new books, or whether you even need to have books. I know my youngest daughter determined many of these classes, she didn't need what it called for. So why put out the expense if you don't need it? Every dollar that you spend now when it comes to student loans and what you're spending maybe on credit is something that you're going to be burdened with to pay back later.
Well, Nina, we've been talking about student loans, but something that every student will see when they get onto a college campus is people offering credit cards. That's a big thing that you see around colleges these days. They're going to start getting those letters in the mail, 0% financing, all of that stuff. So how does credit card debt affect these students?
Well, it affects them directly because what they obtain and and how they use it is going to affect their credit report and their credit score. And some of these kids may not even be aware of that. And I apologize for calling them kids. I always get corrected for that.
That's okay.
Some of the college students have never really had to worry about these things before. We know, based on some of the statistics that came from Sallie Mae, that the average balance carried on a credit card with a student is about $450 or a little more. They don't tend to get into real deep credit, but it doesn't take a lot. If you have a $450 balance on your credit report and you quickly get to $450 and maybe you charge or you don't get the payment in on time, all of a sudden you've got an over the limit, a late fee, and that making that minimum payment at that point doesn't even bring the balance down. So they have to be aware of those types of things. And, of course, what can happen as a result of that, it can reduce their credit score. So when they go into the next semester of school and they're applying, now their credit report or score doesn't look quite like it did the first time around. So that's something they need to understand. There's differences on the credit cards. Obviously, if they take cash advances out, there's going to be a higher interest rate. This may be something that parents have talked to them about or may not, but it's there. And therefore, they know they can use it without real comprehension into, I had a 12% or maybe I had a 10% interest rate on purchases, but I have a 28% on cash advances.
Yeah.
Makes a huge difference.
You got to learn
Jeff.
to read the fine print. That is for sure.
Absolutely. But I don't want to say that it's a bad concept either, because obviously carrying a credit card, if they have an emergency, their car breaks down or something happens that's very critical and they need something immediately, it can be very handy to them to have use of a credit card.
Yeah, credit cards can be extremely convenient. I mean, you can use them just about anywhere. But why is this convenience also maybe a double-edged sword?
Well, I think, again, because of what I was saying earlier, if they get over the limit on these credit cards, charge a little more than they realized, and suddenly they're over the limit, they will incur these late fees. They may, for example, the $450 credit card balance probably has a $20 payment. Once it's over the limit, they pay $20. They have a $35 over the limit fee, may have a $35 late fee. So they're being charged $70 plus interest, and they're making a $20 payment. And that's where the problem lies.
Well, this information kind of leads us into my next question is, what do students need to know before they apply for that credit card?
They really just need to understand how it all works. They need to understand that the APR is the annual percentage rate, and this is the cost for using the card that the company is charging them. The interest rate on the credit card can be a fixed rate or a variable rate. So again, they need to understand what they have on the credit card. Sometimes it'll start out and it'll say it's 0% for 6 months or a year. And that sounds wonderful, but then when it expires, it goes to 18 or 19%. They were not aware of that. They didn't read all the fine lines. So they really need to, if you're going to take something out, you need to really read what the card is offering and understand what you're getting into.
So what credit card options are available for students who have a limited income or who have never had a credit card before?
I know with my girls, again, we did kind of the student card. And generally, as a rule, this is a card that will have a very low credit limit on it, so it doesn't allow them to get into thousands of dollars of credit debt, thankfully. So it starts out with a very low balance on it, and it's geared with maybe low to no annual fee. The cash back on certain types of purchases, again, you're looking for something that has a lower interest rate or fee involved with both of those. We also have what's called a secured card that they can use, where maybe a parent or if the student had a part-time job coming into college, where you can go in and maybe you put $500 into a bank account, and the secured card then has a limit of $500, keeps them from exceeding their limits on what they're trying to do. And then obviously parents oftentimes will co-sign. They may have a co-sign card that they let them go off to school with. If that's the case, I would always advise that you both have the visual viewing of that statement online, because again, it's no different than when you co-sign on the student loans. If somebody's not paying the co-sign credit card or the co-sign student loan, primarily our student, then the parent is held responsible in both cases because they've co-signed.
If your name is on it, then it's partially yours.
Absolutely.
Well, once students get a credit card, what practices work best here?
So they want to maintain a good credit history, and you do that by making sure that you make good choices when you buy items that that it really is something that you need versus wants. So we always stress that. Ideally, you want to pay your balance off each and every month versus making minimum payments.
What's the fun of having a credit card if you got to pay off the balance each and every month?
Well, hopefully that balance isn't big, so it limits them. So they'll think about those things. And it's funny because today's student really does think in those terms.
Yeah, that's good.
We've noticed in the transition over years that, the amount of credit card debt that a student has now versus even 15, 20 years ago is much lower. They're very cognizant of what they're spending, which is really good. But for example, if you owe $1,000 on a credit card and it has an 18% annual percentage rate and you only make that minimum payment of $30, it could take you up to 8 years to pay that account off, and you will have paid an additional $700 of interest. That's things that oftentimes the student doesn't think about. But they really do need to think about this, because the same thing's going to come into play with loans that they're borrowing. You borrow X amount, then you add the interest on. Oftentimes these colleges will actually send information to them asking somebody to pay the interest as they're going along in school. So interest is really something that students need to understand and know.
Well, when it comes to credit cards, how can students avoid falling victim to identity theft? That's a big thing these days.
It really is. And one of the things that I stressed again with my daughters is you don't need to have 15 credit cards. Obviously, if you have 15 and you're at college and you got some in this drawer and some are over there and some's in my old purse and some's in my wallet.
11 is sufficient. 15 is too much.
No, not even 11, Jeff. But, really making sure that what they're carrying is all they need to carry. They know where it is. Making wise purchases. If you go into a store, don't set your card up on the counter, while you're getting your things together. You need to safeguard that number, keep the number inside the palm of your hand so people can't take pictures of them today, which is what happens in a lot of cases. So they just need to be very, understanding of what goes on today and how quickly your information can get out, whether it's using cell phones, using Wi-Fi, and putting this information into areas that they really probably shouldn't be using.
And also reviewing your monthly statement's got to be a big thing too. I mean, taking a look at that really quick every month when it comes out, just to make sure that what you did spend is what's showing up on your statement.
Absolutely. And that's something I can tell you that's doesn't always come natural. I know, again, from experience, my daughters didn't worry about it because I guess they figured mom had everything under control. And me being who I am, probably did have it under control. But you really do need to open those up and look at it, because if there's a purchase on there that you know for sure is not yours, you need to make sure that you're contacting the person about it.
Well, Nina, we have covered so much good information today. Do you have any final financial advice for college students and their parents?
I would just always stress that if you feel like what you're doing is not working, you can certainly give us a call. That's what we work with each and every day, and we have for many years now. We will be actually in business almost 50 years next year, which is really huge. But so don't bury your head. Don't not make a decision to do something about it. You need to call us. And that number is 1-800-642-2227, or you can go to our website at www.guidewellfs.org.
Can you give that number one more time?
Sure, Jeff. It's 1-800-642-2227.
And the website, again, is guidewellfs.org. Nina Heck, Director of Counseling and Client Services for Guidewell Financial Solutions. Always a pleasure to have you here. Thank you so much.
Thank you.